All right, in this video I want to go over something because I think it's really helpful to use in your trading. Once I started trading a few years ago, I quickly noticed that I wasn't the person that wanted to predict tops and bottoms because, you know, that is fairly difficult to do. And you always get wrecked by catching a knife or trying to short a big pump. But with ICT concepts, I actually noticed that it's possible to predict reversals, and it's possible to predict reversals in like 90% of the times because of one major thing, the SMT divergence. Well, when I first learned about SMT divergence, I understood what it was, but I did not use it properly. And that's what happens a lot of people, that when you learn one concept, you start to see the concept like everywhere on the chart. But then at one point, it doesn't work. Why doesn't it work? A lot of the times is that you lost sight of like the bigger picture of things. And what do I mean by that? What I mean by that is that ICT concepts are based on always the two things, time and price. You cannot only look at price. So if you see an SMT divergence, and what is an SMT divergence for the people that maybe remember but don't remember it well, it's when price on one chart, for example, makes a higher low, and on another chart makes a lower low, like that. So between the indices, and that's what I'm going to go over right now, between the indices, you can get a divergence like that. So maybe ES here made a higher low, and another pair, like the NQ or the Dow, made a lower low. And that's when price reverses. You can also see this on the foreign. So between EU and GU, you can have SMT divergence, or reversed between EU and the dollar, for example. So if the dollar takes out a previous high and the euro doesn't take out a previous low, because of course they're inverse correlated, then that's also an SMT divergence. So it's when two pairs do different things that aren't correlated. However, you can see this all the time on all time frames, that highs don't get taken and the other pair does, and stuff like that. How to know when it's an SMT divergence that actually matters. So how can you predict a reversal? Because the SMT predicts a reversal, but you need to know which SMT divergence you want to look for. That's what I want to go over in this video. So you need to combine time with the SMT divergence. And as with everything in ICT concepts, it's important you have the right liquidity points on the chart. And the liquidity points should be time-based. So, for example, of course we have daily highs and lows. Those are time-based highs and lows. So, for example, the gray lines, these ones, are my daily separators. So this is the daily close at 6 p.m., daily open. And this dotted line is midnight open. So this is actually where New York midnight open line is. But between these gray areas is the range of the day. So we get a daily high and we get a daily low. This is the range between this high and this low. And these highs and lows, they matter. So let me see, this was a high. Yeah, this is a daily high from, let's see, this was a Monday. And this was Monday's low. So daily highs and lows is liquidity that matters. Same applies to weekly highs and lows. So you want to have your weekly highs and lows on the chart. How to find them? Just go to the weekly. And if I want to mark out the previous week high, it's over there. And I make it the previous week high. And this was the previous week low. Like that. These liquidity points are time-based liquidity points, and they're a lot more important than a high somewhere in between on the chart, like a wick over here. So you want to have time-based liquidity points on your chart. So previous day high, previous day low, and even the previous day highs maybe from 3 days back. previous week high, previous week low. Now, the funny part is you have the days, highs, lows, week high lows, quarterly high lows. So first Q of this year is done. So that has a high and a low. But you also have this intraday. So if I zoom in a little bit to the 50-minute chart, we can see just a random day. This was yesterday. We can also use it intraday with session highs, lows. And of course, if you remember, ICTs speak about Asia highs and Asia lows. My green box is the Asia session, Asia kill zone. My first gray box is the London kill zone. We have a London high and a London low. And then, of course, we have a New York high, a New York kill zone high, and a New York kill zone low. These are all liquidity points that are time-based. So it's not a random high somewhere in here or a random low. These are specific highs and lows. This is important to confirm if a divergence, an SMT divergence, is going to work or not. And I'm going to show you a few examples, because we had some really, really good divergences this whole week. Of course, if you look at this, you're like, oh my God, everyone gets chopped up. We just move up and down and up and down. Actually, it's perfect order flow in the sense of a high, low market structure. But we can also look at this in a different way and predict a lot of these reversals you see over here. A lot of the big moves down and then a big move up. How? Well, let's look at this specific day, Friday. What we can see over here. Let me first do the daily stuff before I do it intraday. So I have a few examples to go over. If we go back to Wednesday, Thursday, what do we see? We have a Wednesday low of the week on ES. And if I draw out a line to the right, we see that on Thursday, the low gets taken. So this is a Wednesday low. It's time-based liquidity, gets taken on Thursday. Let's go to the NQ chart on the 1 hour. What do we see? Wednesday low doesn't get taken. Then we go to the Dow. Wednesday low taken. This means that two pairs took the low, ES and the Dow did, NQ did not. So this was a point of reversal and a high probable reversal point. As soon as NQ did not take out this low and displaced higher, this was actually a long I was in, but when it displaced higher, you can see here on the 1 hour chart, it made a perfect fair value gap and then started pushing higher. When a divergence happens, the first high becomes a weak point to take out. So this divergence means it's very high likely we're going to take out this high. That's how you can look at the SMT divergences. So this was a first example. Then let me go over another example. Let me see where. Yeah, we have another one. So this was actually also one I called out in my community because I was waiting for it actually. I was waiting for it on Monday, but it didn't happen. I wanted Monday to take out Friday's high and create an SMT divergence between Friday's high and Monday, but it didn't happen. We had a choppy day because there was no news and it was just accumulation. So on Tuesday it happened and I said let me see if I still have it, because a lot of people, of course, on YouTube don't believe anything I say. Let me just show it. I also posted it in Telegram. Yeah, here I have it. Let me get this. Indices on the 9th of April. This was the 9th, Tuesday, 9th. I want to see if we can take out yesterday's high. Here you can see it. Let me see. Can I open this? Yeah. I want to see if we can take out yesterday's high with divergence like that. Well, the divergence did not happen on the S&P. That one also took out Monday's high. However, the Dow did not. So what was I specifically looking for? This was Monday's high, right there. On Tuesday, it got taken out. Then I was watching the other charts. S&P 500, Tuesday, taken out. Then the Dow, Monday's high, was exactly this high, to be clear, but even that high, not taken out. We got an SMT divergence, making this low the drawn liquidity, as you can see over here. How you can trade this, you can trade it in a few ways. You can trade either the weaker pair, in this case NQ took the high out, ES took the high out, so you can trade the Dow if you like, and that one took out liquidity here. Or just like the move on here on NQ did not take out the low while the other pairs did, and that one was stronger to take out that liquidity. If I go to ES did not take out that liquidity, so the stronger pair in this case, and YM didn't even do shit here. So the stronger pair is then ready to take out liquidity. In this case, the weaker pair, Dow, was ready to take out this liquidity. So this is how you can see which reversals matter and really give some nice price action. So this is a daily liquidity point, but we can also use it within sessions. So if we zoom in a little bit to this specific Friday over here, what do we see? When I zoom into Friday, I see we have an Asia low right there. Did not get taken during the New York session. When I go to NQ to Friday, Asia low, even one low before that. So if we can actually take the whole session, because I think my sessions are off. This is 8 p.m. Let me see if this is in the right time zone. Yeah, it should be. Well, doesn't matter. This low gets taken by New York. ES, Asia low doesn't get taken, and also this low doesn't get taken. MYM also did not take the low, and NQ did. So this is also an intraday SMT divergence happening over here, where price started pushing up. This was not the liquidity taken eventually. That's because we had a bearish structure, so that's definitely something you should keep in mind. And you just take your TP on the most logical PD array points. If you're finding it hard to look for the right PD arrays or entry models or stuff like that, you can always join my course in the community for only $55 a month. And you can even leave if you like after a month if you watch the course. But if you want to get better in a simpler and easier way and learn ICT faster instead of going over all of his really tough videos, then I definitely recommend coming into the community, because you'll learn so much faster and you can ask me all the questions you like. So that's what I recommend doing then. But for now, you can see over here that every time there is an SMT divergence, we get a massive push or a massive drop. And those are the reversal points. So, like I said before, I'm not the one who likes to predict tops and bottoms. However, with this in your tool map and only looking at the time-based liquidity, so always looking at daily highs, lows, weekly highs, lows, session high, lows, and you can make this as like small as you like to the 15-second chart, because it's all fractal, then do that. Another big one is that we had this, let me do it correctly. Yes, March. This is the first quarter high on NQ. So this was March still, and right now we're in April. Go to the ES chart. What do we see? This was the same March, 21st of March, got taken out on the 1st of April. So we had an SMT divergence between the first quarter of the year and second quarter of the year. This was what I pointed out in the community, like, watch out, a lot of people are bullish right now, but we have a time-based divergence over here. That's really something you need to watch out for, and that can give a push to the downside, and that's what you're currently seeing. And I believe now that we should see a little bit more downside, but that's for another day, and that's more for my weekly outlooks, stuff like that. But I recommend you watching, studying the chart, and look at what you see over here, and start looking at the weekly profiles, how they form, what you've learned from ICT, or what you maybe learn in my community in my course, because I also go over the weekly profiles, and study what you see, how the divergences have impact on that. And if you get good at this, I know for sure that you're able to predict a lot of reversals. So I hope this was valuable for you. If you want to ask me any questions, I don't do that online because I simply get too many questions and I cannot do that. So that's why I started the community. You can ask me all the questions you like over there. It won't grow bigger than 200 members, just to make sure that I have time for plenty of people and that we keep it like a great community with a good vibe, and not people in there like trashing everything and stuff like that. So no poor mindset people in the community, only high vibe people in the community. And I would love to see you over there if you'd like to join. But for now, start studying this and it will massively advance your trading. So I hope you enjoyed this. Let me know in the comments. I would love to hear your comment, what you took out of this and what you learned. Of course, please let me know. So have a great day and I will see you in the next video.